Hello everybody, welcome to TraderMerlin Show for your Tuesday edition. You're going to have a fun one today. We're going to have Bill Henner join us here in just a second. Hopefully, I got rid of some of the redness that the camera shows. Thank you guys for the feedback on the video. If you haven't figured it out yet, I'm colorblind, so it's difficult for me sometimes to get all the colors dialed in and make everything work perfectly. So you told me I was red, and other people have said it, so I fixed the redness. I hope we look decent today. All right, that said, let's dive into the topic du jour. We have a lot of things to talk about, obviously. One of the ones we've been focusing on for quite some time on the program has been the U.S. dollar. So I thought, why not, for today, let's bring on a trader from out in the Chicago floor days. He's now here in Southern California, and we're going to be talking about the next big move in the dollar, because obviously this could have a big impact on us. Joining us today from sunny Southern California, got Mr. Bill Henner joining us. Bill, how you doing?
I'm doing great, Merlin. I always enjoy the opportunity to join you on the show. It's always a lot of fun to share some information with the folks that are out there.
It's been too long. Hopefully we'll get more activity between the two of us.
That's my wish as well. Sounds great.
Awesome. All right, so let's start off with the big picture stuff and look at the dollar and the next big move. When you and I talked before, you said, in 6 to 10 months, I really see a big move. And for traders, it doesn't matter whether that move is up or down. Bottom line is a big move signifies a lot of opportunity. Walk us through what you think that big move might be.
Okay, well, without tipping my hand too quickly, I'm seeing a lot of market behavior that, in my view, is very reminiscent of what we saw 8 years ago. Now, some of you guys may remember 8 years ago was when the Fed was well into their quantitative easing program, their remedy or their help to bring the country back from the Great Recession. Mm-hmm. But it was middle of 2013, the chairman of the Fed made an announcement to the world that the Fed was going to start tapering their purchases of long-dated treasuries. Okay, right. And meaning basically they were going to slow down, how much they were buying every month. And the bond market reacted almost violently. It sold off very quickly, meaning they pushed interest rates up very quickly over a very short period of time. In fact, that move in the bond market, is kind of one of those historic moves that people talk about. They even gave it a name. They called that move the Taper Tantrum. Okay?
Nice.
And to me, what we've seen in the last month and a half in the bond market this year looks very much like that. The bond market essentially, you probably even heard the term, the old term we used to use called the bond vigilantes are back in action.
Right.
The guys who are basically forcing the Fed to get real with the markets. And again, a lot of that's based on certainly fears of potential inflation. We're just seeing basically another $1.9 trillion being dumped into this economy in one way or another through the COVID relief bill. That is a big amount of money, even these days. Okay, mm-hmm. So, that is likely to have some direct effect. I think it'd be silly to assume it's not going to have a lot of direct effect on lots of different markets. But certainly one of the things that's come out of that is that the bond market has increased interest rates, expecting possibly inflation, but also pricing in greater economic growth and activity. Again, higher interest rates are not necessarily a bad thing. They're really the market's belief that the economy can sustain itself even if rates are higher. But again, we've had this big drop in the bonds. And so to take it back to 2013, just a few months after that sell-off in the bond market, the bonds actually did recover pretty substantially off of kind of the panic lows. But what did happen and continued to happen for the better part of a year was that the U.S. dollar just took off. If you look at a monthly chart on the U.S. dollar that includes the year 2014, you can't help but notice that. I mean, That is, again, one of these historic moves. I didn't hear a name ascribed to it, but if you look at it on a monthly candlestick chart, you see 9 green big monthly candles in a row, basically.
Right. It's funny because looking in comparison, and you're right, it's not like there's nine candles in a row that are green or red is pretty impressive to have, but just the magnitude and how big those are for those that aren't.
Oh, yeah.
You can see it in the middle of the screen here where I'm moving my cursor.
I mean, you can see the U.S. dollar went from, slightly under 80 all the way to well over 100 before they were done. So, a move to, basically, what's that? That's a 25% increase in the value of the dollar during that 9-month period.
Bill, it's kind of funny. I look at moves like this, and I always go back to the perception that I think most retail traders have, because you just mentioned you go 25% move, and a lot of people are going to go, 25%? So what? Bitcoin moved, 30% in 2 days. This is nothing. You have to remember, this is the value of every single dollar's purchasing power around the world has been impacted to the tune, in this case, it's 25%. That's a massive change.
It's huge. And especially when you consider, the monetary value of a move like that using a leveraged futures contract. Okay?
Yeah, right.
I mean, 20 points in the euro, or even in the U.S. dollar. I mean, that's a move of $25,000 on one futures contract, or one standard lot in the Forex market.
Right.
And I can tell you, I mean, those are the moves where, some of the best, most successful traders I've met in my career made their whole career.
Their fortunes, right.
That's the kind of move that made George Soros a billionaire.
Right.
Okay.
When we look at this chart, you mentioned that there's similarities between what we're seeing now, and you guys can see the hard red edge of the chart here. You have 3 months of the dollar showing strength, and clearly since the pandemic started in 2020, the dollar has shown a bit of weakness. But we did come down in some areas of demand. That $90 mark seems to be a pretty solid one. We've got 3 big green candles here. And you mentioned that it's very similar to what we saw in 2014. That said, are you expecting to see that, a series of 9 green candles in a row for the dollar again?
I think that I'm not going to predict that we're going to get a move of that magnitude. But,
right.
It's amazing how often markets do tend to kind of repeat behavioral patterns. And, and again, I could see this also, as being, again, a lot of factors. I think, again, the primary driving factor may well be that the United States economy is going to be, certainly in the short run, the one that kind of comes back from the depths quicker than essentially the competing economies, particularly European and Japan. And again, if you're talking about the dollar index, that's really what we're talking about. Again, that index is mostly euro with a mix of other industrialized nations' currencies put into it. So, and I can see, again, if you see, the low that was established in the dollar just literally in the first week of this year, is just slightly higher than the low that was established, back in early 2017.
Right.
If you look at that kind of, sloping double bottomish formation looks a heck of a lot like that same formation from 08 to 2011.
Right. I'm mapping it out right here. 08 to 2011. Okay, I see what you're saying.
Yeah, you see that, see there's that, it pulled back to essentially a big drop base rally on the monthly chart in early 2011, and that's where the final, that's where the move really started from. Then, of course, it really accelerated in 2014. But I can see that happening, and frankly, again, that might not be something that, the major economies of the world want to discourage. If the U.S. comes back really strongly, arguably the best way to kind of give some stimulus and help to the European economy would be for them to have a relatively weak currency. So we'd be buying more of their stuff than we're selling to them, which could kind of jumpstart their economy as well. So it may actually be politically expedient as well to have a very strong dollar for a period of time. I remember back in during the Reagan administration, especially actually it was the first Reagan administration, the dollar really took off. And by 1985, the dollar had gone up so much that it became a real problem. And we had basically, essentially the central banks of the world getting together, and they came up with a plan to actually devalue the dollar. And I don't think, again, that's not something we have to even consider right now. But sometimes once they get these moves going, one way or the other, the market tends to kind of just keep feeding on that trend to the point where eventually it becomes a problem. But as I said, if the U.S. dollar, does what it did in 2014 again right now, by the time it's done with 9 green monthly candles, there might be some concern about that. But I think certainly in the short run, there's not a problem at all. And frankly, as far as I can tell, most of the world is still betting and expecting that the dollar is going to go lower.
Right.
I think it was last week's Commitment to Traders report said that short positions in the dollar had been reduced fairly significantly, but the market was, at least speculators, were still fairly heavily net short the U.S. dollar. So that could actually, again, typically what happens, these types of moves, the first, bit of the move is just short covering.
Right.
Then it finally starts to turn into a real trend. Right now, I think we're just, as I would say, in the short covering phase of dollar positions. We haven't even gotten into the point where people are really starting to go long.
For the viewers out at home that wanted to kind of see that, I mapped out the Reagan administration. So this is right around January of 1981 to January of 1989. And you can see that when Reagan took office, the dollar was pretty cheap. I mean, we're looking at the dollar index at down around 83. And over the next few years, it peaked out in 2016, or sorry, I keep saying 2000. It peaked out in 1985 at right around 164. So you're talking,
sounds like a double in price to me.
Exactly, a 2x. And what's interesting is his second administration, it came all the way back down to 80.
Yeah, and as I said, a lot of that was driven by active central bank intervention. I remember it was very famous in September 1985. That was in the days when I was relatively early in my career as a floor trader. I remember coming in on Monday morning and basically the word was every currency was up the limit in the futures markets, because over the weekend there had been a secret meeting at the Plaza Hotel in New York where the finance ministers of all the big countries got together and came up with a coordinated effort to devalue the U.S. dollar because it had been so strong.
Some couple really good questions coming in here. Let me see if I can get to these ones. Larry says, just speculating, if the U.S. paid off all debt, how would that affect the market? First off, the U.S. paying off all its debt would be like me getting the MVP in the NBA in the final game. There's no way. I'm 5'8", I'm 160 pounds. I would be swatted around like a little fly. There's no frigging way on earth the U.S. will ever pay off its debt. I will take that bet against anybody right now that wants to take it. But let's just throw hypothetically out there. What do you think would happen if, by some miracle, we managed to pay off all of our debt?
I don't know, because that is such not an improbability, but virtually an impossibility, that it's hard to even imagine what circumstances could get us to that point. So again, I can't even really begin to imagine what that would do to markets per se. It's just, again, generally speaking, I think, the knee-jerk reaction to any kind of reduction in U.S. debt would be perceived as positive for the economy, for markets, all that, because, again, at some point, it is going to, paying, for the servicing of the U.S. debt is going to be a real problem. And again, that's part of the problem with a bond market dropping much more, The 10-year yield was about 50 basis points at the low, the low yield last year. It's now over 150. So bond rates for 10-year duration have actually tripled over the course of the last year. So, but imagine that, but they're still at very low levels. Imagine that they go to 3%. That would be a doubling of what we're seeing right now in terms of rates. And again, at that point, it becomes a lot of money just to pay the interest on the U.S. debt.
I'm doing a couple different things here for the viewers, because I think, in theory, if the U.S. was to pay off all of its debt, it would be looked upon as the darling child of all global economies, because every country has debt. It's just the way that they grow their expansion. So if we could manage to maintain some semblance of good economic data having no debt, then what would happen, in my opinion, would be that everybody would be flocking to buy the U.S. dollar. You would probably get a U.S. dollar that is just off the charts. And now that could create some big problems here, obviously. That could impact commodities significantly. People wouldn't be able to buy as many commodities because the dollar price would be so high. So that might impact commodities to the negative side. Now, that said, and this is just basic economic stuff, when you have a dollar that is running so rampant, what that means also is there's the potential for inflation. And if you look at what happened on these charts, go ahead, Bill.
Yeah, well, actually, I mean, again, typically speaking, a stronger dollar would be less inflationary. Again, a
Correct.
stronger dollar would give U.S. citizens a lot more purchasing power, especially in terms of other currencies. So,
right, but that also would drive the demand. So let's think domestically. If all of a sudden your dollar could buy a lot more stuff, you might buy more stuff there, and therefore inflates prices. And this is the chart we see here on that dollar index. If you guys notice the interest rates on the 30-year fixed, right? That was in 1986, it reached 16% for a 30-year fixed mortgage, right? That was a sign of inflationary pressure. So what they were doing was raising rates to help thwart inflation, to help choke it down a little bit because it was getting so high back in the mid 1980s. And
right,
I think
when Paul Volcker came in.
Exactly, yeah. So, it's weird because we do have that belief that a strong dollar would actually potentially not have inflation, but it did. And then we came all the way back down and crashed. And just to show you guys what the markets did, you'll notice on the screen here I've got from 1978 to 1994 just to show the full picture. And I'm going to try to do the same thing on a different platform. So I said 78 to, make sure we get those dates in there, 78, and I want to get to 94. So this is pretty much the exact same chart that we looked at, guys. And you notice that in the chart of the dollar index, it had a huge spike, peaked out in 1985, and then crashed from there. There was a little of a blip in 87, but other than that, the markets continued to rally. So even though the dollar had these massive fluctuations, we still saw overall strength in the markets. And I do believe this is because of market architecture. Markets are built to go up. They buy the strong ones, they get weak ones out of the index, and they're designed to go up. So not as much impact as I expected to see from the dollar falling from 160 to 80 back in 1987.
Yeah, I mean that was another one of those historic moves.
Yeah.
And again, I always like to show those moves, the magnitude, the duration of those kind of moves to new traders, because as I have mentioned to you probably before, the most successful traders, I mean, if you just do it based on actual net worth, the guys I know that really did the best in the business of trading were the guys that were good long-term currency traders who could ride those waves that sometimes went on for many, many months at a time.
And I think, looking at that picture of the dollar index right now, and I go back to it, it's, if you believe as Bill does, that, we could be seeing something similar to what we saw back in 2014. And sorry if I'm bouncing the screen all over the place right now, but looking at what we saw in 2014, that this could be the next leg up. Even if we get back up on the dollar index up to 100, this can have a pretty big impact, especially if you're trading that dollar futures contract. But also for markets overall. And I'm not 100% sold the fact that the dollar is officially reversed, but guys, take a peek at the daily here. We've been looking at this one a lot. Yeah. It's making higher highs and higher lows, And
I think on the daily, I think I would really begin to question whether I was right, start to really think I'm wrong. If you look at the daily chart, just a couple weeks ago, we did have a nice little base rally on that daily picture. Mm-hmm. It's pretty prominent right there. I think if it gets below the distal line of that particular area, then it's time to really go back to the drawing board and reassess things. But I could see it pulling back to that. And if it pulls back to that area, holds, then starts moving up, that could really be setting the stage, as I said, for some ongoing move to the upside.
And to capitalize on something like this, everybody, it's not saying you need to go all in. I like what Bill just said right there, which is, look, I'm not sold yet. And unfortunately, everybody's sold when it happened. That's just the reality of markets. We don't really know until it happens. But you can start to get clues. And the way that's been slowly stair-stepping up, you guys noticed, if you go back and watch Power Trading Radio for the past few years, I've been aggressively bearish on the dollar. Now all of a sudden I'm feeling a little bit more optimistic on that dollar index simply because it's starting to base. And now it's only for this year, right? It's only been a few months, but if we can continue to make higher highs, higher lows, then you start to scale into a bigger position here on dollar index or items that might be influenced by the dollar, because clearly this is going to have an impact if it continues to rise.
Yeah, and if you look at, again, using the monthly chart kind of as the roadmap, I could see a run pretty much going straight up to that area around maybe 107 or so in the dollar index, and then possibly going up for a retest to that area closer to 120.
Whew. Wow, that's it. That's getting up there. Oh, yeah, you're higher up. Okay, yeah, I was just looking at these peaks.
Now, again, we're talking about months and months and months. This isn't going to happen by next week, of course.
Yeah.
But, I think, again, paying attention, I always find that as a trader, I do better when I've got a strong sense of what the primary direction of the market is, whether it's simply going up or down. It makes the whole process of making decisions about trading a lot easier if you're focusing on either buying pullbacks or looking to sell short on rallies. And again, the trend, of course, is your guide as to what your preference would be.
Great question. This is for, where was it? For Big Eb. He says, based on that, and I think what he's talking about is based off the analysis we've been talking about here, which is a dollar rallying, what will happen to gold and silver prices if we continue to see that dollar rallying?
That, again, is a really tough question, and I'm not trying to evade it.
No.
But gold just isn't what it used to be. It, again, we've had conditions in which, if there was really a lot of appetite for gold would have been around probably $5,000 right now. Okay. We had and yet it's been acting surprisingly weak in my estimation. Again, I'm not sure that I'm ready to just say gold isn't the store of value it used to be. I think there's a strong possibility that there is a very large but quiet seller in the spot gold market. And that could be any number of major central banks who are, frankly, because of the pandemic and the devastation of their economies, are simply trying to raise some cash. And the way they could do that is by selling some of their gold reserves.
Mm-hmm.
So there may be kind of an artificial ceiling on gold for a while until they get done with whatever the amount of gold is they need to sell.
I think the challenge with gold is there's the belief that when you have a weak dollar, people can buy more of a commodity, and most commodities are priced in U.S. dollars.
No, it's actually the opposite. A strong dollar gives you more buying power.
Domestically, right.
And internationally. A strong dollar means we get more, $1 will buy more stuff that's priced in euros.
Correct. But somebody who's European looking to buy something in dollars, dollar-denominated asset can buy.
They're getting the exact opposite.
Right,
They're the ones that are being forced to pay more for everything. So, again, that's part of the reason why, oftentimes politicians don't like a strong dollar, because all that tends to do is to increase an already very large trade deficit, which is oftentimes perceived as ultimately a bad thing. Just kind of like, unending debt being accumulated is not ultimately a good thing. A super strong dollar is also ultimately a potential problem.
It's funny. I'll never forget, most of the teachers that I learned from over the years, well, even from elementary school, I have a handful of people that left an indelible mark on my understanding of life in general. And Jamal Munshi, this guy was an economics professor at Sonoma State University. Brilliant. One of the most important things he taught me about finance was he was going on vacation every summer, right, as an instructor. And we always asked him, where are you going on vacation? He goes, I go wherever the dollar buys me the most. What's funny is I apologize on, again, condescending, which I've gotten that compliment or a complaint before. Most people don't even think about what their dollar buys them outside of, I can just buy stuff. But I tell you, it was always for him, it was Thailand. Like for 3 years in a row, it was Thailand. And basically, it taught me about the purchasing power of the dollar. And I was shocked to find that, if I wanted to go to a vacation in Europe where all of a sudden the dollar had been falling and I'm getting less purchasing power, but I could go to Thailand and get 3 times as much for my bang for my buck, I'm going to Thailand. And I think that this is something like for all of us, we should be thinking about, even if you're shopping at local grocery stores, right? It's almost like if I can go to grocery store A and buy 1 can of Coca-Cola for $1, but I can go to another one and they're giving 2 for $1, go to the second store, right? Go to the second one to get the best deal for your money. And to me, that's something we all should be thinking about as this dollar continues to rally, because we will see areas of the world where your purchasing power, if the dollar continues to rally, just drops significantly. But there's always going to be some place around the world where it's actually going to be gaining in purchasing power. So keep an eye on those ones.
Well, I just think back, I mean, and haven't been in a classroom in a little while, but it was literally just 2 years ago when I, taught a class at our center in Vancouver, Canada.
Mm-hmm.
And when I got there, the Canadian dollar was just under 75 cents. So, as far as I was concerned, everything was 25% off. It was all priced in Canadian dollars, but I knew that those dollars were only worth 75 cents of every dollar I had in my pocket.
Yeah, it's funny. I remember growing up, I'd have these books, and I'd always wonder, like, well, how the hell are there two prices in here? Because it'd be USD, like it'd be a $10 book, and then if it was on USD CAD or CAD, it would say, $11.50. I'm like, well, can I buy the $10 version? I never quite understood that.
You got US dollars.
Exactly, got US dollars. Some great conversation going on in chat here too, because you're right. We can make the argument that the dollar is good. We can make the argument that the dollar is bad if it's strong. For example, a weak dollar is generally good for U.S. companies that don't really do a lot of exporting, right? Actually, I'm sorry, they do a lot of exporting, because what that means by having a weak dollar is somebody from Europe can come to America and buy more stuff. So based off that example I was talking about with my finance professor, somebody from Europe's going to go, hey, instead of going to, let's say, England for vacation, where I don't get a good deal, I'm going to the U.S. and I can go there and buy all these electronics at a much more discounted price. That's if the dollar is weak. Right. If the dollar is strong, it's actually pretty bad for exporters, because all of a sudden our products become really expensive and people might not want to buy those products and services. So, different ways to look at these things. That
certainly, should remind everybody, that's been an ongoing issue for decades with China. China has, very overtly, oftentimes kind of lowered the value of their currency to stimulate the export business so that we can buy more cheap stuff at Walmart.
Mm-hmm.
And that's been an ongoing strategy of theirs. And that's why we hear the term currency manipulators and things like that being thrown around.
Right. And we're one of the biggest culprits of them all.
Yes.
Let me get your take. I've got a question from Big Eb and others about this topic. It's certainly been something that's gained a tremendous amount of popularity. Your thoughts on crypto and Bitcoin in particular, because people are talking about how Bitcoin is now stealing gold's thunder and becoming that instead of the stockpiling gold, they're just stockpiling cryptos, which obviously is much more cost efficient.
I think that's clearly evident right now. I think Bitcoin is the new gold for many investors in the world right now. It's certainly, Bitcoin's kind of acting the way gold used to act under, uncertain and potentially inflationary circumstances. Mm-hmm. And that thing has certainly had a huge run up. I thought it was fascinating, though, that if you look at the chart of Bitcoin, and then you plot right next to it the plot of the M1 money supply in the U.S., they basically look the same, telling us that the money supply has increased hugely over the last year.
It's funny because as you mentioned charts, you're like, if you plot Bitcoin, and I was typing in, I'm all going to be super cool and have your chart ready, and he said the M1 money supply. I wouldn't even know what to type in to get the M1 money supply. So we don't get to see that chart.
You go to the Fed's website, I think. You can get a plot of it there.
And Kevin also brings a good point. He says, if you have a real strong dollar, it actually hurts companies. So think of this. If you're a company that just exports, right? You're only a US based company, but you just export goods and services. Great. You want a weak dollar. But if you are a company that is multinational, like Apple, right? You got Apple corporations in different countries. If all of a sudden the dollar rises significantly and Apple, let's say Apple in the UK is sending profits back that they made in pounds and they're trying to convert it back to dollars, it actually hurts them. So it depends on what the companies do, right? It's not as clear cut as saying strong dollar, good. Well, weak dollar.
In fact, multinational corporations are pretty well set up to deal with the moves back and forth in currencies. I mean, Apple probably has a full, division of the company that's dedicated to managing and hedging foreign currency risk, or just moving, even things like moving manufacturing facilities from one country to another, depending on which one's got the most favorable foreign exchange rate.
Mm-hmm. Well, and they've got quite a bit of cash as well sitting on their books. So yeah, there certainly is somebody out there who's who's running the numbers behind the scenes. For those who want to know, I believe Apple.
You mean Apple didn't use all that cash to just buy back their own stock like the airlines did a couple years ago?
I'm sure they've done some of that, but they currently they have a measly $76 billion in cash right now on their balance sheet. So, it's fine.
Right.
For many of you out there, I think that you asked about the relationship between gold and Bitcoin. Not that gold's going away. By no stretch of the imagination is gold done. But I think if you look at the logistics of transferring, storing, securing, having vaults and all that kind of stuff on gold, it's extremely cost prohibitive for a central bank to have Fort Knox type locations full of gold, whereas I can have a little Nano Ledger S and just have a couple of private keys and I can store it anywhere I want. I think that might be something that we'll start to see central banks start to move towards. I know it sounds weird that they're going to go just buy a product that's made out of thin air, a digital address in the middle of space, if you will, but you look at what Tesla's been doing, a MicroStrategy, I think that trend is more and more that people will be using those on their balance sheets. And we'll have to wait and see what the future holds, but it's been part of the driver for Bitcoin's amazing run.
I would absolutely agree with you, Merlin. In fact, if you look at it, really the recent acceleration to the upside in Bitcoin, and I'm imagining other crypto as well, was really, came right on the heels of the announcement that Tesla, other corporations were actually buying significant amounts of that stuff.
Yeah. All right. If Apple Cash was left in Oregon Trail game, well, I don't know about that, Medic. Let's see. What else we got for today? You had talked about, what was the other thing you wanted to mention today? You had a couple topics. We were going to talk about.
Well, yeah, one thing, again, this is something that I've seen literally just out in the news environment in the last few days, is the talk that many young people who, of course, are getting their $1,400 direct deposit into their checking accounts. Many of these people actually have full-time jobs. They don't need the money that's coming in their stimmy, as they call it. Mm-hmm. So there's a lot of talk that many of these people are planning to just plow that money right into stocks. Get their retirement accounts going a little bit earlier than they might have, or at least accelerating it. But the real problem to me is these guys don't know what the heck they're doing. I read a story, I think it was in the New York Times yesterday, about a fellow who took his $1,400 and used it all to buy shares of AMC.
Yeah. I have to laugh because you said something there and I wanted to jump in, but I had to let you flow. You said that they're, putting the $1,400 and thinking their retirement. I got to stop you right there. They're not thinking about the retirement, man. They're thinking about what stock can I buy? And they don't even call it stocks anymore. It's stonks. STONKS is what they call them now, which is like, okay, the stonk market, whatever. Just make up some new terms so it's all original for you. But yeah, they're just going out there and absolutely speculating. A couple of the crypto companies that I'm tracking and looking at some of the statements they release, they said that the last time that the stimulus was released, there was a $1,200. The amount of deposits for $1,200 was very consistent across the board. They saw this huge spike in inflows in capital, and my guess is you'll see a bunch of money pouring into the crypto area as well because of that. Just I'm sending it right over to Coinbase, going to go buy some Bitcoin or whatever one I want. It's crazy.
Right. And but I wouldn't be surprised if a substantial amount of that goes into stocks as well.
Correct.
Regular stocks, as you call them now.
I don't call them that. I'm someone who's been doing this for a while, so to me, they're stocks. They will always be stocks with STOCKS. But hey, they love to create all kinds of crazy things.
I was shocked. I mean, my son, who's 32 years old right now, a month and a half ago, I was talking to him, and he let me know that he had just bought some GameStop stock. Fortunately, he unloaded it at $400, and to the best of my knowledge, he never went back.
Good. I was going to say, did you cut off his allowance? Because that's just bad.
No, but I tried to explain to him that that ultimately, the fundamentals do matter.
Yeah, this has been one, and I've been brutal on the show. For anybody and nobody on the show will even admit it they're holding GameStop because they know I'm just going to tear them apart. But buying something that you know is going to go bankrupt in 5 years because nobody buys physical games anymore, and now you're paying $500 for it. It's crazy.
Yeah, but something? I thought the party was 100% over when I saw GameStop go back down to 40, but then it's come all the way back up to 300.
Well, and the reason for that is because they know that when it was back up into the $300-$400 range, that these Melvin Capital and all these companies are back shorting it again. because it deserves to be at $10, $20. Who knows the exact valuation? Yeah. But well, so they basically tried to do the short squeeze.
They just gave the big guys another opportunity to make a bunch of money.
I know.
Again, ultimately, I think despite the headline stories that big move up in GameStop, that the big losers were the institutions and the winners were the Reddit boys. I think that's absolutely a false narrative. Yep. I think that it was the big guys that wound up making the money, just like they always do. And in fact, some of the big guys bailed out Melvin Capital and the other guys who got in trouble.
Yeah, and you're absolutely right. And that's the point I've been making here is the narrative has been that the little guy took it to Wall Street. Look, They punched Goliath in the face one time, right? Those guys lost money. But, Melvin Capital sitting here short GameStop at $40. You think they're not going to jump out and re-short it at $400? Yeah. They made way more on this second leg down than the first one. So, in the long run, it's them who win.
Right. And my guess is very few of those retail speculators sold their GameStop stock. Their stock at the price when they had a big profit. They probably rode it all the way up, all the way back down, and
diamond hands, man. Diamond hands, what they're calling them. You got to hold on forever. It's like, yeah, I'm okay holding on to something I believe in long term, but saying the GameStop is going to change the world, wow.
Well, if they like that, I've probably got some old Blockbuster shares I could sell them too.
Keep those. Those are probably going to be worth something someday, right?
Like my Pan American stock certificate I have on my desk.
Really dangerous. If you could actually have like the Pan American Airlines, captain's outfit, I bet you that's worth a pretty penny. Bill, tell me a little about what you're going to be doing teaching-wise. I know you mentioned you had a class recently. I know we're starting to get physical locations for Online Trading Academy up and running again, which is great.
I don't have any on-site classes scheduled yet. I made sure I got the word out to the powers that be at Online Trading Academy that I am now vaccinated and ready for business again. So I'm very comfortable with the idea of getting on an airplane. So I'm just hoping somebody, again, it's really coming down to the centers, the need, and again, the individual states have different rules and regulations on what they can do. So, but I think we're getting closer and closer, and I'm very excited about getting back into the classroom.
Good. I'm excited to have you back in. It's always nice to be in front of students teaching.
Get up and teach a class at Irvine so we can go to Tai Fung.
Let's do it. I'm ready. I could use some pork shoulin bao. Love them.
Yeah.
Actually, you shouldn't don't mention Tai Fung on the show because I don't want anybody to know about it. This is the secret restaurant that is amazing. Now, if you guys are in Orange County, it's a chain. I think that they're Michelin rated, but their pork shoulin bao guys are some of the best on earth. And they have the centers.
Absolutely concur.
They have a glass cage where they actually show them. They're making them from hand. And I actually asked them. I don't know if I told you this. They actually send their employees. I believe it's to Taiwan to go to a course on how to make these things the right way. I'm like, wow. And they're in there just repetitive stress injury like you wouldn't believe, but hey, they're delicious.
They certainly are. And I hate to see what would happen if that place got more popular than it already is, because it's usually about an hour and a half wait under the best of circumstances.
Yeah. You know what they started doing? They started doing a like a Yelp where you can make reservations, which is nice.
Oh, good.
Yeah. So
hopefully the location here in San Diego has that available too.
That's great. Well, hey, let me know next time you're up here. We'll definitely go hit up Tai Fung. Thank you for coming on today. I appreciate it. I hope you get some classes here soon. That means things are starting to look good.
Okay. Well, I'm hoping I'll be up there very soon indeed.
Awesome. Take care, Bill. Thank you so much for coming on. Appreciate it.
Okay. Bye-bye now.
Bye-bye. Guys, that was Bill Henner coming to you from San Diego, a longtime Chicago floor trader. Just a well-rounded guy, knows a lot about the markets. Thought it'd be fun to talk about the dollar index today and the impact of stimmy checks. I think that's just kind of funny. Pretty sure we will see a pop in the equity markets and cryptos in particular because that's just where they're going to go. All right, hour and a half wait. Yes. Tom, it's just lines out the door, but try it one day. It's pretty amazing. Let's see. There were some questions in here I want to make sure I get to about cryptocurrencies. Medic says, how will the government control cryptocurrency? That's a great question. And, nobody knows for sure how they're going to control it. And I don't think that they will ever be fully able to control cryptocurrency, but there will be specific regulations, I think, on it. If you listen to some of the comments that Janet Yellen made recently, also very interesting comment from today from Jerome Powell. Jerome Powell actually said something to the effect of, Bitcoin is like the new digital gold. It's like, oh, wow, you made that connection there and you said it publicly. That's a big one for me to hear him say that. But Janet Yellen was talking about the concerns about people being able to hide money, etc. So I think what they're going to be looking for, not necessarily control, but their take of the pie, if you will, meaning taxes, meaning they're going to be much more strict and vigilant about tracking where things go and what you owe them with regards to taxes. And, fine. I'm okay with that. I know some people would scream about it, but I think that if you want it to succeed, the government's going to have some slice of the pie. If government's not getting anything out of it, then they're going to shut it down in any way possible. How could they do that? Well, as you know, they can't really shut down Bitcoin. They can't stop it, but what they could do is, impose a 1-year jail sentence for possession of Bitcoin or anything like that, or having a digital wallet with Bitcoin. I mean, those are extremes, but that's what they could do. And there would still be people who would have Bitcoin, but it would certainly deter most people. They could prohibit transactions in the U.S. in Bitcoin. So you have Tesla saying that you can pay for Teslas with Bitcoin. If that was the case and there was it was a criminal act, then Tesla would shut that down and all of a sudden Bitcoin would take a big dive. So to me, there's ways that they could hurt Bitcoin, but I don't think that they necessarily want to. I think that will look at ways that they can work with Bitcoin or digital assets, as Brendan likes to call them. And I think he's right. It's really just digital assets as a general category, but they just want their cut of the pie. So I think that that's what they will do, Medic. I don't think they're really going to shut down Bitcoin or cryptos, but they'll try to work with it and get their cut of the pie. That's the most important thing. You guys are asking about GME, Gamestop. Let's check out Gamestop. Here is their earnings announcement. I called this one the popcorn trade of the week just because you knew it was going to be wild. Here is when the market closes, this little tiny vertical line that you guys see. So I'll put a plot on there, and we will say that GameStop closed at 181, roughly. Rallied all the way up to almost 200, fell all the way down to about 150, and now it's back up to 160. So just a wild one. That's a wild ride for GameStop. Again, leave it alone. And I saw in here someone was saying that they... Baldhead Bees said sell puts at $50 on GME. I tried to sell puts at $50 for GameStop, and they wouldn't let me do it. Said I couldn't be naked on it. I was really kind of disappointed with that one. Big Eb says they missed their estimate. Yeah, they did miss their estimate. I will show you that right now since we're wrapping up. Let's go to, not that one, go to this one. Here's GameStop. You can see they missed by 8%. So they're supposed to come in with a $1.46 of profit. Surprisingly, even had a profit. And they reported 134, so not doing so well. Yet they were up 3% on the day. You go into after hours, and they were obviously getting smoked here in the after hours session. So there's your GameStop. What other questions do I have for you? My friend bought some GameStop calls and then fell back asleep for a huge loss. He deserved it. Yeah, well, I hate to say anybody deserves it, Harrison, but the number of people that contacted me and started talking to me about their GameStop holdings, I'm just literally shaking my head going, okay, you were at the right place at the right time. You bought it at $80 and it's now at $300. Unload it. It'd be, like I said, it'd be very different if all of a sudden this was an upstart company that was, I don't know, a COVID vaccine or a new technology or an electric vehicle company that has this potential for years down the road. I think we all agree that GameStop doesn't have that potential. Everything is going to be downloaded from the internet. You're not going to go buy a physical game unless they turn these into cool gaming parlors, which I think that would be a hit. I just don't see them making it. So I hate to see people lose because they weren't paying attention or had no clue what they were doing. That's why I think education is the most important part. Let's see. What else are we on? Hour and a half. Yes, wait. Let's see. Is that... Yes, you know what, Baldhead Bees, that's what they were saying. And I wanted to call them up and say, look, I have the cash in this account to sell these $50 puts. But they said they're calling that a naked transaction. And I get selling a naked call because then you're forced to buy it if it goes infinitely higher. But with this one, I'm forced to buy it at $50. I had all that capital in that account. And I was kind of bummed because the premiums were just really, really high. I'll show you. Let me see if I can bring this up for you guys. The premiums probably changed significantly right now. But let me bring up Option Station here, just so you guys can see it. All right, Harrison. Then he deserves to lose it if you warn him over and over and over again. Yeah. Well. Oh, well. Okay, so here's your option chain. Let's just check out GME to get an idea. Now, these aren't going to be updated because the market is closed. But if you went out a month, and the ones I was going to sell were 1 month out, Here's your $50. So if you sold one, you would be making $265. My plan was to sell 10. So basically, it was me $2,600 that they were going to give me to commit myself to buy GameStop at $50. And I'm like, you know what? I'm okay with that. I was okay taking that risk because look at the daily chart here. I'll put a line at $50 just so you can see where it had to fall to get to that price. To me, I'm all right with it. Look where it's at. 50's way down here. This bottom black line. I would be okay selling those $50 puts today if they would let me. I probably would do more than 10. You know, I think that you'll probably see GameStop bouncing around in that $40 to $60 range is kind of its sweet spot home that I think it'll be back into. So, Baldhead Bees, those options. Oh, you're looking at 360. Yeah, that was for 24 days out. Yeah, there you go. Hey, Bald, if you're okay with that, he said $3.60 premium now as he's looking at it for 31 days to expiration. And bottom line is, are you okay committing yourself to buying GameStop at 50? I would probably be okay with GameStop at 50. You know, $40, $50, we talked about it on the show here. You know, $40, that's the number I've been saying, but I'm fine with $50 as well. As long as that amount of premium is good for you and you can do it, then they're not letting you sell it because you're selling them. I guess. Whatever. It's fine. I'll find something else. I mean, today I sold puts again. I sold puts today on SLV, XLE, XLF, and Russell 2000 today. So, and those are all 24-day expirations. So, you know, they'll let me sell some stuff. They just won't let me sell GameStop. Okay, what do we have today economic-wise? So there was a couple things that I think may have scared the market a little bit. I know most people aren't thinking this way, but when you look at the numbers that came out today, especially new home sales, this has been, I believe, one of the major drivers of the housing market. So new home sales, obviously, taking a big step backwards today. The previous month was 948,000. They expected it to drop only 70,000 to 872. We came out at 775. That's a pretty big miss, and that, I think, sent a little bit of a ripple through the markets, as did some of Powell's comments today and other central bankers. So you can see there's quite a list of them today, but Powell had a lot to talk about. You look at your earnings calendar for today, Adobe came out. They beat earnings. We're just barely up on the day. That's after market close. Let me see what they're doing after hours. I didn't look at Adobe. ADBE, 5 minutes. And yeah, so really just did nothing on that earnings announcement for Adobe, which is surprising for a $460 stock. You own some of those, huh? Let's go back to that calendar here. All right. Steelcase, I didn't see their numbers reported. Anyway, let's go to tomorrow. Tomorrow's a monstrous day. It's called the Magnum PI Day for the UK, is what I call it. It's the Magnum PI Day. Basically, what it was CPI, PPI, and RPI numbers come out tomorrow for the UK. That's going to happen about midnight, so you'll probably all be asleep at that moment. But if you're a currency trader trading the pound, that could have a big impact on you. You start to go into the European session, you'll see you got flash services and manufacturing numbers. The one that is of interest to me is the German flash manufacturing data. The reason I find that interesting is because Germany is as I mentioned on Monday Morning Must Knows, it's the fulcrum of the European Union, and their numbers have been doing better. The flash manufacturing data has been looking pretty good, and the euro has been gaining strength. If we see weakness in German flash manufacturing data, then I expect the euro to start to sell off tomorrow. So it'll be one of those ones to watch out for if you're trading euro-related instruments or trading euro currency pairs. Moving back into the later in the morning, you've got British pound with flash manufacturing and services, and then we get the U.S. We also have flash manufacturing and services. That's going to be 15 into the market trading session. But you also have durable goods orders. You have Chairman Powell testifying yet again, and crude oil inventories. They're expecting a big drop in the inventory numbers there. So quite a bit of stuff going on with the economic calendar. It's a busy day. Big stuff here is the U.S. down near the bottom. All right, your last piece, earnings for tomorrow. You've got 10-cent holdings. You got General Mills, Shoe Carnival. If they all dressed around in clown shoes, that would be fun. KB Homes reports earnings tomorrow. Now, this is an interesting one because as we just showed you, new home sales numbers dropped significantly. KB Homes reports earnings tomorrow, and they are A home builder, that's right. So we might see some weakness in KB Homes tomorrow. They're probably already trading down in the after-hours session. But when you look at new home sales like this, dropping significantly to the tune of 175,000, that could have a big impact on KB Homes reports this week. And I think later on we've got Lennar and Toll Brothers later on in the week, if not next week. So that's your economic calendar and information. Let me see. I got a couple questions here. So what is going on for IWM? I think it's just a rotation. I think it's just a rotation of assets, and small caps have been on fire for quite some time. You just saw a rotation. What was interesting about it was the magnitude of the rotation. So let me bring up a chart here as you guys push me to go another hour. Son of a biscuit. All right, so here are your major market indexes. You see the S&P today. Let's go to a daily. All right, it started off okay and then had some weakness. You can look at the NASDAQ here as well, faring much better, but then the Russell just puked it today. All right, Russell really just gave it up. It was pretty much weak all day long. I just think you're looking at a rotation. There was comments about the economy not being as good, and I think a lot of this is driven by the Fed's comments. Big Eb says, Merlin, is that mainly an inventory issue on housing? Well, I think it's a combination, honestly, Big Eb. I don't know all the data driving points for new home sales, but if all of a sudden we're seeing those numbers decline, it tells me that demand is not as strong. And if demand is not as strong for that, then is it going to existing home sales? All right? So is it a rotation from people buying brand new or going to existing homes? If both those numbers start to slide, then that tells me that we're going to start to see a little bit of a pinch in the housing market. And of course, 14% of GDP, roughly 14% of GDP, is housing related. So if housing market starts to slow down, GDP numbers can drop real quickly, and all of a sudden we start to see this spiral, if you will, of economic data that could start to get progressively worse based off that. So it's an important one for me. Cool. Good. I think I got it. And I'm going to be out here under an hour. All right. I have a special show for tomorrow. I was trying to get a guy to talk about this this cryptocurrency, big, gigantic festival that's going on, but they didn't want to come on the program. So we're going to have somebody else who I've actually been trying to get on for quite some time. Kayla Christine. Some of you might have had her as an instructor at Online Trading Academy. She's actually been working with me on building a lot of the self-paced content. She lives over in Europe right now, she travels all over. And so what we're going to do tomorrow is talk a little bit about trading from around the world and kind of the lifestyle of a trader, because if anybody is living it, it's Kayla, because she's moved to Spain, she's living there, she trades, she teaches some classes remotely, but wherever she goes around the world, she's got her laptop and she has her strategies that she trades. And I think it's great, not only because of the lifestyle and the tactic, but because of the age. Kayla is very young. I think Kayla is under 30. And to see not only somebody under 30 have such an affinity to trading and investing, but to be female as well, I think is a very interesting thing. So if you have any young girls out there or ladies in your life that you want to get interested in trading and investing, tomorrow might be a great show to check out. Okay. That's going to do it for me for today. Again, if you guys have questions, feel free to send them on in at TraderMerlin@gmail.com. You can send me any sort of good feedback, bad feedback, let it rip. You can also give me a thumbs up if you like today's show, or like Bill Henner. If you want to know where he's going to be teaching next, you can contact your local online trading academy. They are starting to open up to some physical classes. I actually went to Irvine here recently to move my office, and they had some physical classrooms going on, which was great. Certainly spaced out. It's not like they used to be, but just to be back in a physical classroom environment is pretty awesome. So check with your local center to see where Bill Henner is teaching. And we'll have Kayla Christine on the program tomorrow. That will do it for me. Thanks, everybody. I'll see you tomorrow.